you look at my screen, they're red and white. And so I bet if you guys are, most of you guys already know, if the market's going up, we can just take a pretty darn good guess that those would be bullish candlesticks. The red ones are negative. And so the reason why I actually have them as white is just because that's the way the template that I have, that's the colors, and I like them. So, I think it's a cool mix up, and I know which charts I'm looking at. If I'm going to look at a regular time chart or Heikin Ashi candlesticks. So let me tell you guys what Heikin Ashi candlesticks are. Their other meaning actually would just be the Japanese average. So you guys know that we usually look at Japanese candlesticks, which are just regular time. I mean, it shows you the direct movement of the pip, and from there it's just the time frame. So it's literally the open, the close, the high, the low. And instead of using the open, the close, the high, the low, Heikin Ashi candlesticks actually open at the midpoint of the last candlestick's close. So that probably sounds really confusing, and I'm going to break it down for you. But that's how it smooths out your trading. And so the benefits of these are that they allow you not to get faked out. A lot of you guys hit me up a lot, and you're like, Storm, I'm using this, but I'm getting faked out. And, my entry is crap, and, all these different things. And so this will smooth out a lot of your entries, especially when scalping. And for a while, I trade both ways. I trade as a long-term trader, so I will leave trades open for 4 hours, 5 hours, 8 hours. I could leave them open from the beginning of the day to the night. But I've been falling in love with scalping recently again because I have been busier. And so when I'm busy and I only have an hour to trade, I literally on Sunday night made $3 grand scalping with Heikin Ashis in like 2 minutes. I was probably trading for like 40 minutes. So I was watching TV and just like practicing demoing it out. And so basically I do know that it works. And I like fell in love with scalping again. I was like, wow, this saves you time. It's a really cool method. So trading on, and if you're impatient too, that's what I'd say. So basically Heikin Ashi candlesticks, the benefits of them, like I said, they smooth out the market. So if I compare them to, which I'm about to do now for you guys, a regular, this is Euro USD, it's the minute chart. I'm going to show you what the regular Euro USD looks like. And let me go to actually Market 5 right now. And you guys can kind of see that the reason why they look so smooth like that, it allows you to see the trend easier. So literally, usually what we see when we're looking at timed regular Japanese candlesticks, we see what? Like a mixture of red, green, red, green, red, green, and amongst the trend. These smooth out the trend for you. So it allows you to stay in longer so that you don't get faked out. One, it allows you to enter better. And for the most part, it's a pretty darn, it's kind of hard to go wrong with these. So it's pretty neat, but you have to read them a different way. And like I said, I'll break down kind of the formula of their open, their close, their high, their low. Really all that changes is their open, but I'm going to show you in a sec. So let me just compare real quick the Euro USD chart. Let me set this up super fast for you. Oh shoot, oh, far down. I feel like I've done this so many times. I'm like actually falling in love with the way that my Heikin Ashis look. When I go back to the trends on what's the name? On a regular one, I'm like, ew. But let's see. So this is a regular Euro USD 1 minute chart. So this is what it looks like on red. And so do you guys see what I'm saying? If we look at this little, I wish I could draw a little circle, but you follow my mouse, you can see that it really, basically amongst even a trend, this isn't really a trend right here, but let me go to another trend, through trend, downtrend. We know about pullback, of course. Those are going to happen, the little micro trends. But in the midst, we see green, red, green, red, green, red. It looks like a little Christmas kind of. And so even in the trends, you see a lot of that. Now let's look at a Heikin Ashi. Look how smooth that looks. Uptrend. That was up, up, up. So just 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes, 7 minutes, 8 minutes. Candlesticks slowed up. Indecision form. We drop. Woo. So it's very smooth. It's like a smooth, I love it. It's just very smooth. And your pullback, it allows you to see pullback smoother. So when it's pulling back, how we use our micro trends, for instance, this was a downtrend here. If I drew a trend line, and we could use our micro trend lines easily in here. See that? As soon as it's over, it's just over. You don't have to worry about any of the foolishness in the midst. besides the one little doji right there, which that was nothing. It's just beautiful. So the reason why I love that is that, like I said, I'm falling in love with them is because for scalping, it's like, it's dangerous, man. You can make so much money. So we're gonna get kind of into now. You guys can see some of the benefits of them. Like I said, it's smoother. It helps you not to get faked out because of the way that they average and like the way that they're set up. And they also let you stay in trades longer. So even for like hours, like if I go to an hour chart, you can see right here, we had basically a double top form and then straight breakout. So you can see how clear it was, and you could have stayed in that trade for a very long time. And I'm going to show you why you could have stayed in the trade once I teach you, you know, the formation of how they form and why they look how they look, etc. So they look just like Japanese candlesticks. They're just a little bit different. So if you guys don't have any questions, I'm going to keep it rolling. And if you do have questions in the midst, just go ahead and type your questions in the side box, and I'll respond to them as I look. I'll just keep the side. I have it like pulled up on the side of my my charts, and I'll just answer anything that you know, comes up while I'm talking. So I'm going to pull back to my 1 minute chart real quick. And like I said, this is most effective for scalping, or I've used it for scalping mainly because it's magic. So 1 minute charts, like, in the beginning, I used to say I don't like 1 minute charts. Now I'm like liking them a lot because you can grab 20 pips and exit your trade very quickly and walk away with great profit. So let's talk about the Heikin Ashi Candlestick real quick. So like I said, you guys are very familiar. I'm going to zoom in on a candlestick specifically. This is how they look zoomed in. They look totally different. But what I'm going to do is go to, if you guys remember, bullish candlesticks, which are buyer candlesticks, they do what? They open at the bottom of the cube and they close at the top of the cube. And then they have wicks on them, which are the high. So it's the highest price that it got to within that time period. And it's the lowest price on the bottom. That bottom wick is the lowest price that price got to during that whatever time duration you're looking at. So if you're on a 1 minute, same thing applies. The opposite goes for a bearish candlestick. These are regular candlesticks I'm talking about. On a bearish, you open at the top, you close at the bottom of the cube. Wicks remain the same, high, low. Now on Heikin Ashi candlesticks, basically, the reason why they call them the Japanese average is, like I said, the formula for them is that the last close, so the last candlestick that closed, they open at that candlestick's middle, meaning that like it basically, the formula for that is like the open and the close plus the close divided by 2 would make the open for the next candle. So that confused you. I'm gonna have like all of the different the calculation for you if you want to know why it looks like that. But basically it smooths out. So it's almost like these candlesticks are telling you more truth because they allow you, I mean, they're telling you a lie a little bit, but they're allowing the price to be smoothed out because what it allows it to do is not to have so much mixture. So it shows you the trend better because really what it's doing is like we see all the pullback. So when we're trading regular charts, what do we see? We'll see like a red candle. Like if this were a 1 minute regular, we see like red, green, red, green, red, green, even though it's trying to drop. And so here we can just see that price is this trend is strong. And so basically the only thing that changes on them is, like I said, it just the open for each candle is basically the previous's candle, the middle price for it. So I'm gonna give the formula for that. And like I said, it took me a second to get it. I was like literally struggling when I was like, what you mean, you know, the middle of the candle? But it's basically just the open and the close of the last candle divided by 2. Well, both of them, you know, together divided by 2. So simple but easy. I mean, the simple but, you know, can be a little hard to think about when you hear someone saying it. Either way, I'm going to give you guys the formula so you can see it. But this is how the charts look, and I love that if you can see, if you know anything about, like I said, how we trade off of what? Reversals. So it allows you to see your trend very clear, and this will help you guys not get stuck in any pullback. I mean, not get stuck in what am I trying to say? Not get stuck in basically like entering a trade and then not knowing how long to stay in, because I'm going to show you guys how to read the candlesticks. So basically, we're going to start off with how to trade them. And for uptrends, we'll start with 2 main things that you're really looking for when you're in an uptrend, and well, when you're looking at the candle itself, is that basically, and you're going to notice as you trade them live too, but bullish candlesticks or bullish Heikin Ashi candlesticks, the ones that do not have wick on the bottom of them tend to have a lot of strength. So if you notice, you're looking for them, you're looking at their size. So you can see that they have strength in them just by the size of the full body. And then there's only wick up top. And so it kind of applies to regular candlesticks too. I've told you guys that before. You know, when there's a lot of size on a candlestick, what does that tell you? It tells you that, for one, it's a large candlestick, so there's a lot of volume. So if you're thinking in your mind, you know, when trading, I mean, you should be in your head, like looking at the volume of whether who's in more control, who has more control. And I always say that, you know, full body candlesticks represent decision. Candlesticks with a lot of wick represent indecision. So small bodies represent indecision. Long wicks, and you know, they represent indecision, and that's usually what our reversal candlesticks look like. So if you're looking at hammers, if you're looking at dojis, if you're looking at hanging men, all of those candlesticks, what do they have? The one commonality is that they have wicks. The wicks show where they wanted to be at, which shows that they did not have enough strength to close out there. So if you're thinking that should be your trader sentiment by now. When you're looking at your charts, you should have that mindset, like you should be paying attention to how big a candlestick is. Have we seen have we seen a huge green candlestick shoot up and then a huge red candlestick follow it? Heck yes. That's usually when the market is in some form of consolidation or just, you know, indecision itself. So that, you know, like I said, what I love about Heikin Ashis, it clouds out the noise. So, you know, the confusion of seeing so many different colors. And here you can just see the trend smoothed out, and all you see are the corrections. And there's no, you know, breakup in the trend besides just the corrections, and then we move forward. Small correction, you move forward. So basically, though, you're looking at the size of the candlestick itself. So when you see one candlestick, when you're looking for a reversal, so let's for instance just trade this uptrend. I'm gonna start right. This would have been a nice little uptrend to take. And I could have done a little micro trend line in here. I mean, not a micro trend line, but this is what they call, if you guys haven't, I'm going to do a whole thing on this too, as far as like really increasing your trend lines, because I'm huge on them and I trade them a ton. But this is kind of what I call an internal trend line. So I have my main trend line, but then I have my internal one too. And so basically, though, we could have, you know, rode this wave all the way up. And so I'm going to show you guys kind of now what we would have been looking for whenever we were going to catch our reversals. So let me just pull out my micro trend lines. And I'm loving that you guys are loving these, because everybody's been hitting me up. My inbox has never been this on fleek, but like people hit me up all day. They're like, yo, I watched that entries and exits. It just makes so much sense. And I'm seeing now, you know, I'm seeing how to draw my micro trend lines. And I'm like, yes, that is what it's about. You know, you have to practice them, and they don't have to look perfect, but they definitely, you know, you want to see kind of like, I'm really sloppy with them low key. So, you know, it's just about, like I said, practicing drawing them and then demoing it until you get very comfortable with your entries to go live, you know, with it. But you can't really go wrong with this, especially with Heikin Ashis. So starting at the bottom of this trend, beforehand we were in consolidation. So if I put up a little thing, it could have said consolidated. But so consolidation, then we have a breakout into an uptrend, started making higher highs, higher lows. But look at this, and we're going to look at the candle specifically. So right here, we see a small bodied red candlestick. If I delete this trend line in the middle, so you guys can see, hold on. Oh, it's going to delete all of them. Okay, if I just move this trend line, you guys can see real quick. We have a reversal candlestick right there. That could be a hammer if you wanted to call it that. Hammer forms right on top of my support. So reading for bullish sentiment, since we are in an uptrend, if you're reading in Heikin Ashi candlestick, what you're looking for when you're going to get into the trade is that the body is, for one, it doesn't have a wick at the bottom. So what it allows you to see is that price actually opened and there's no sign of the seller. They're basically they're absent. They're not there. Same thing for the next candlestick. Same thing for the third. So until you start to see any sign of the seller, which you rarely will see when the trend is, or when the buyers have a lot of value. And this is for these candlesticks. So I'm telling you guys, like, this may seem like, I don't know, say like juvenile. I mean, like, you know, it's like amateur, but it's not, because you have to know how to read these and what they look like. So they look different on a regular chart. So you can like test that out for yourself. But basically, if you're looking at these, you want to see that there's no wick. So this allows you to say, hey, I could stay in this trade. I don't even see any type of seller wick. What's the second